The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin, Jeong. Now, alternative investments, once the exclusive domain of institutional investors and ultra-high net worth individuals, are rapidly moving into the financial mainstream. As yield-seeking behavior intensifies and traditional 60-40 portfolios face new headwinds, individual investors are exploring alternatives, not just for diversification, but for long-term growth and income stability. But with this rise comes a set of new challenges. Are investors truly equipped to understand the complexity, illiquidity, and risk that often accompany alternative assets? So, to find out more, joining me now is Gerald, who is the Deputy Chief Investment Officer at Reed Capital Partners. Hi, Gerald. Welcome to the show. Thank you so much for joining me here in the studio.
Thank you for having me.
All right, Gerald. Have alternative investments truly gone mainstream, or are we still in the early innings?
Well, I think at this point in time, it's pretty safe to say that alternative investments has kind of gone mainstream, right? How do we actually determine that? The fact that even the retail investors are talking about it, especially in the space of private equity, private credit. These are some of the traditional asset classes within alternatives that they are already talking about. So at this point in time, I would say yes, it has gone mainstream. And of course, there are lots of different kinds of assets that the retail investors have yet to explore or have yet to witness. So there are more to come in the coming years for investors, especially for the retail side, to start to see more interesting types of instruments to invest in the alternative space.
Yeah. All right. Well, what are the biggest signals you're seeing that suggest individual investors are embracing these alternatives?
Biggest signal, I guess it's more towards the type of returns that they are aftering. So let's put it this way. As we all know that in the past, all right, alternative investments are considered more sacred. Only the best of the best, or rather institutional investors, can invest in it. Right. Not so much on the normal people like you and me. So over the years, as I think two main reasons kind of open up alternative investments to the public. Number one is there's very vast information that is moving around about the investment world. And number two, which is also more importantly, is financial innovation. All right, so financial innovation is quite an important point over here, is because so far we've seen since the year 2000, right? And of course, post GFC and whatnot, there's a shift towards trying to get capital from the normal individual investors like us. All right, so we know that for the past 20, 30 years, a lot of liquidity has been driven into the markets and the economy. And it's safe to say that there is this growing middle class, right? And of course, the high net worth is also growing as well on the individual side. And that also means, collectively speaking, all right, individual investors actually has a bigger power of capital to be deployed in alternative space. So this is some of the bigger signals that we are starting to see. And of course, with all this, private equity firms coming up and say that, hey, let's really attract the money from them. How do we do so? Number one, and I think that's most importantly, is high returns because of this illiquidity premium.
Okay, but I mean, why the shift to alternatives? Why not something else? Why are they so attractive, especially in the current market?
Okay, now all we can say that at this point in time, of course, let's put our focus a little bit away from alternatives for a while and look at financial markets. All right, financial assets, has long been the traditional assets, right? You know, 60-40, 40 being bonds, 60 being equities, right? That has always been a case to be so for a diversified portfolio for the last 50, 60 years or even 70 years. All right. So over time, investors are starting to see, I would say, they want something more fresh. That's one thing. And alternative investment is a space that, like I mentioned earlier on, the supply side, which means these companies, the private equity firms or VCs, are trying to get new money from somewhere else instead of those traditional sovereign wealth funds, endowments, or pension funds. So who do they go to? Individuals, right? So you have to, and then of course they understand the mindset or the behavior, the psychology of all these folks, is that you need better expected returns to be able to attract money from them. And of course, over time, this is also a good form of diversification because in terms of correlation, historically speaking, alternative investments has always been quite uncorrelated to the traditional assets.
Okay, so what types of investors are showing the most interest in alternatives? I mean, you did mention that even individual investors, they're looking more into alternatives, but who are the lovers of alternatives per se? Is it the high net worth individuals? Is it the mass affluent, or even and retail?
Okay. At this point in time, because my line of work, I work with mainly the high net worth investors. So probably I can vouch for them. I'll have a better data to understand that, to share that high net worth actually has quite a bit of interest over time. All right. Especially with family offices, right? So we know that family office is basically a bunch of individual investors or families come together to create a fund, right? Trying to invest in all these new kinds of assets, you can, so to speak. All right. So I would say high net worth investors are still the ones who are very interested in this space because with their large amount of money, and of course in this current investment environment, it's quite difficult to really, generate alpha. Excess return. That's very important, right? For any kind of fund that anyone manages, it's always very important to, even for individual investors themselves, they want to gain alpha, maximize their returns. Where do they go to? All right. With what we see right now, because of high liquidity in the markets, fixed income, as some people are saying that it's uninvestable. US Treasuries, and of course, equity markets has been overvalued. Where do they go to? The next best place would be alternatives, commodities, private equity, private credit, even real estate.
Right. Yeah. Then on that note, what kind of alternative investments are gaining popularity at the moment? Is it, the private equity, or is it, collectibles, and why?
Well, what I've seen so far is private equity and to some extent private credit. Now, for the last couple of years, private credit was really uncanny in the sense that unprecedented in terms of the attractiveness because if you remember back in 2022, Federal Reserve started hiking interest rates. In fact, the global central banks were hiking, right, because of high inflation. That actually brought cost of borrowing up. Naturally speaking, in the private credit space, that also means that a refinancing at a higher rate for all these companies, right, that are privately owned. All right, what happens? It becomes, so in terms of what they see right now, back then for investors is that, hey, I can actually invest in a type of a private bond market, so to speak, at a double-digit returns, 12%. Some are even giving 16% at the point in time. So a lot of people are not thinking that much. That's one thing about alternative investment is that a lot of individual investors who just got to know about this asset class are really, really enticed by the returns, but not the risk. All right? So because of that, everyone's piling in. And of course, I would say that during this period of time, private credit has, of course, gained a lot of notoriety as well because a lot of bankruptcies happen since then. And of course, private equity continues to do very well as well because everyone's flushing because of high liquidity, going into alternative space to get more alpha.
Okay. Well, then on that note, let's talk about some of the risks. I mean, the mainstreaming of alternatives, they open doors to individual investors. Like you said, higher returns here, but it also introduces significant risks. So what are some of the biggest misconceptions or blind spots that individual investors have when entering the alternative space?
Okay. So what we usually see over here is low risk, high return. That's quite a big misconception in alternative investing. All right. Number one, the biggest reason why the risk is so underestimated is because a lot of all this modeling that is being used to price the risk based on historical data is smoothing effect, right? This smoothing effect, put it simply, it underestimates risk and usually overestimates returns. Now, what happens when you have high returns and low risk on an adjusted basis, risk-adjusted basis? Everyone thinks that it's a good investment, but it's not always the case because there is a lack of information available in the market. All right. And of course, there's this lack of price discovery. All right. In the equity markets, fixed income market, the public side, you can get pricing every single day, every single second. Right. But in the alternative space, you can't. Usually, at best, you can get a new valuation price, probably on a monthly basis. And it's also based on a lot of assumptions. Right. This assumption risk is pretty high in the alt space as well. Yeah, it's because of all this risk added together with, of course, the illiquidity premium. There's this basically a risk of high underestimation of risk and promises of high returns, which may not be the case.
I mean, high returns and low risks. It just sounds too good to be true here, right? In other words. So how should investors think about liquidity, valuation transparency, and regulatory oversight when it comes to alts?
All right, so I think in recent years, because usually in Singapore, let's put it this way, Singapore's perspective about allowing alternative investments to be available to the vast public, it's already happening, but it's still coming up very slowly in a sense, and because MAS is more strict. Right, it's stricter when it comes to all this because, as I've said, and you mentioned as well, liquidity is an issue. Right, you cannot just trade in and out as when you want. Right. Number two, underestimated risk, and of course, regulation-wise, it's because of all this information asymmetry. A lot of regulators are very skeptical about opening up to all these normal investors like individuals. All right. But of course, it's already starting to happen. All right. MAS, because after all, we take our example in a sense from the US. All right, a lot of regulations. US that side has, of course, opened up a lot of different kinds of alts to be available to be invested. The likes of Blackstone, BlackRock. These are the guys that allows as low as a couple of $1,000s to allow you to be part of that investment.
Right.
All right.
Okay.
So it's quite concerning as well. So I think regulation-wise, in the coming years, it's going to be quite a challenging situation for MAS because, of course, as a lot of more investors or younger investors starting to be more interested in alts, they will find ways to actually go around it, to find ways to invest in alternative investments.
Okay. Then do you see the shift to alternatives sustainable? I mean, will we see more investors seeking alternative investments, where one day we could see alternative investments as common in portfolios as equities and bonds?
I would say right now it's already very, very common, right? So 60-40 is the thing of the past. Right?
Okay.
So for myself, my firm, we do invest for a lot of individual clients and family offices. And of course, over time, we started to see this shift, the sentiment shift already, that they're no longer interested in bonds because it's so boring. That's number one. Yeah. And the returns are not that high because returns are always based on a relative basis, right? So if today you see product A that's giving you 6%, and you see that the other party has a bit of exposure in a bit more risky space in alts, they're giving you 12%. People start to shift their attention to the other side. So that's why we have started to see a lot of clients specifically telling us, hey, Gerald, I think we really like some alts inside. Please really try to push our returns up a little by adding more exposure into alternative investments. But of course, these guys are able to do so. Why? Because their investment horizon is long. All right. One thing good about alts is that if you have a long-term investment horizon, you can actually benefit from it.
Okay.
Yeah. But of course, if you're a short-term trader, high chance you shouldn't be in alts at all.
Right. Well, on that note, I'm pretty sure that some investors listening into our conversation here, perhaps they're now interested in looking into alts now. So before we let you go here, Gerald, what advice would you give to investors considering their first allocation to alternatives?
All right. So I think, first of all, always find time to understand alternative investments, right? Especially the private equity market and the private credit market. That's the two most common ones. Let's not even talk about hedge funds or whatnot. Those are a little bit more sophisticated. But spend some time, for every investor, spend some time to understand what are the risks you are going to be exposed to. All right. And of course, if you insist on investing in alts, getting some exposure there, start small. I mean, it's always to start small, right? I mean, the whole point over here is to preserve your capital.
Right.
All right. So yes, it's good to get some alpha, but if it's something that you're not sure of, you want to be part of, always start small first. And of course, over time, try to understand it better and you're more proficient in that space. That's when you can start to really leverage on it and ultimately gain some excess returns.
All right. Yeah. Some great insights from you there. Thank you so much, Gerald, for joining me today.
All right. Thank you, Tia.
Thank you. That was Gerald Gan, who is the Deputy Chief Investment Officer at Reed Capital Partners. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.